Retirement. Let's talk about retirement, guys. Everybody has a different notion of retirement, but we all agree that to retire at whatever age you want to, you need money. Today I want to break down retirement into physical retirement and financial retirement. You can be financially retired at 25 years old if your parents leave you a trust fund. You don't have to do anything and you have money coming in. You can be financially retired at any age with no money and live on the street if that's the lifestyle you want. But really I want to talk today about financial retirement, because at some point I realized for myself that I never want to be retired. I want to work for fun. I want to work to feel needed. And a lot of people that I met, they're well into 80s, they still work. They don't have to work. They don't have financial need. So what is financial retirement? Financial retirement is where you can work for pleasure. You don't have to work because you need the money. You ever wanted to become a teacher but chose a job that will pay a lot better, you can become a teacher. Okay, so to be financial retirement, you need to have passive income. Okay, what is passive versus active income? Active income is your work. And in real estate, active income, if you develop properties, if you flip properties, that's active income. Okay, every day you go to work, developers go build projects, that's active income. Passive income is something that you earn while you sleep. Find a way to make money while you sleep and you don't have to work a day in your life. I think Warren Buffett said it, or somebody else. So really the idea for financial or any kind of retirement is passive income. Obviously, to make passive income, you need to have money. In order for you to have money, you need to work. Or you need to marry well, or you need to have rich parents to leave you trust fund. Passive income, and how much of it do you need? So really, it's the lifestyle issue. Some people, they have a very modest lifestyle and they're happy with $5,000 a month. Some people, they're happy with $10,000. Some people, they'll never be happy. Okay, so it's really, you have to look at your lifestyle or lifestyle that you want to have. Passive income is investment in real estate. Passive income is investment in stock market, which is a little bit different. Passive income is investment in LBC Capital Income Fund. To have passive income, you really have to have enough money and the yield that will support your lifestyle. So for example, you want to have $20,000 a month of income that's going to support your lifestyle. Okay, so let's call it $20,000 a month. Okay, so you'll be happy with $20,000 a month. You can say, hey, I can work when I want to work, I can travel when I want to travel. $20,000 a month gets me there. Okay, if you have $1 million in savings and you invest at 24% a year, because $20,000 a month is $240,000 a year, that gets you there. But nobody's going to pay you $24,000 a year. So you need $3 million at 8%. $3 million at 8% gets you to your financial retirement. You get to keep your $3 million. You're not using that. So you still have $3 million net worth. And you get $20,000 a month. Okay, for example, you're of retirement age. Okay, you have your other 401ks, IRAs, you have Social Security or your pension. Let's say you have $5,000 a month coming from that, plus this, so it gets you to $25,000 a month. So these are your all, because you will get some pension at some age. Okay, so this is passive income, guys. Okay, how do you derive to this? I mean, you have to look at your mortgages, you have to look at your car payments, you have to look at your monthly payments. Okay, if your mortgage is $20,000 a month, this number needs to be higher. But the point is, you know, if you work for 20, 30, 40 years, you accumulate that $3 million, $2 million, $33 million. It's not that difficult to get here. You need to save, and you need to really look at passive investments. And even today, to save yourself from daily ups and downs, because a lot of us, we have financial anxiety. This is the cushion, properly invested, properly diversified, will get you here, okay? This can be diversified and should be diversified too. You can buy an apartment building, you can buy a condo, you can buy a house that you're gonna rent out. You can invest in LBC Capital Income Fund to get the same 8%, and it's gonna get you here. Why do I use 8%? 8% historically is the return that you can get in any market without taking unnecessary risks. You can get that in real estate, you can get this in private mortgage funds, you can get this by investing in broad market, S&P 500, over a long period of time. Okay. When you invest in stock market, you have to understand you're going to have fluctuations. Okay, so it's not as easy to get that 8% consistently. So probably your risks vary with age. So the older you get, the less of a stock market you'll be able to stomach. So 8%, anything above 8%, that's aggressive return. Anything beyond 10 or 12, that's probably, you know, you're risking losing everything. I think that's it. Save, invest, get here. When you're younger, you have $3 million, you don't have to take that 8% to get that $20,000 a month. You can make, you can roll it. Let's say you have $1 million. After a certain amount of years, you will get to $3 million if you don't take it, because you're still here, you're still working. Okay, but you can be at ease because your savings, your wealth will generate you sustainable, predictable, passive income. Thank you guys. Subscribe if you haven't.